Don't we rumble, float like a butterfly, and sting like a bee. Ah, rumble, young man, rumble. Down goes Frazier! Down goes Frazier!
It's time to get in the ring with the Cornerman, preparing dentists for the next round. We give you business insights, trends, and timely information. And we'll interview experts to help you make smart financial decisions. Now, here are your Cornermen, Rob Joyce and Mike Bark.
Welcome back to the Cornerman podcast. This is Mike Bark, and this week I'm joined by one of our partners, Megan Rutkowski. And I'm sure you're getting bored with all this stuff, but we're going to be talking about everybody's favorite topic, PPP, PPE, local grants, sick pay, FMLA, FICRA, just about every letter of the alphabet is going to be represented within this podcast. But we thought it was an important time to update you guys on a number of these topics because all sorts of things are happening with people claiming sick pay and with banks pushing PPP applications in your face and whether or not you should apply for forgiveness now and all those things. So we're going to cover these topics one by one. And I guess we're going to start here with the PPP update. And Megan, obviously a lot of our clients are being asked to apply for the forgiveness application right now. Should they be doing that at this point? You know, kind of what's your opinion?
Well, I think, the banks are going to be sending you things and wanting you to apply for forgiveness because they want to get these loans off their books. So that's the reason for wanting you to apply right now. Just to back up, it used to be the forgiveness needed to be applied after your 8-week period. That got pushed back to 24 weeks. So as written, you now have 10 months after the 24-week period ends to apply for forgiveness, which pushes us next May, June, which is generally in the accounting industry, what I've heard when people are expecting they're going to help their clients apply. And as we've talked about, the reasons are, the one big reason is we don't know if the deductions related to the PPP grant income that you receive will be deductible. And we're kind of waiting for Congress to act on that because it wasn't consistent with what the original intent was. So once you receive the forgiveness grant, that income is technically taxable right now. And I mean, general tax planning is you want to push any taxable event usually to the next year anyway. So you agree with that, Mike?
Yeah, I mean, I know people can make an argument that if they look at things, potentially next year may be a higher taxable year for them in terms of maybe marginal tax rate and things like that. But I think our opinion is if there is going to be a tax hit on this, there's going to be some tax due as a result of the forgiveness. My belief, at least personally, is the next 6 to 9 months are going to be very tight in a lot of the industries that we serve, probably especially healthcare, where you're working in confined spaces. People may be afraid to come in and get treatment. There's going to be more and more people, it looks like, getting exposure as we move indoors and are being forced to quarantine. So I think the conservation of cash trumps any potential increase in tax that you might have next year. And I think that's kind of how we're approaching it, that cash conservation over the next 6 to 9 months is going to be exceedingly important. And if I can defer paying tax by a full year, it makes sense to do so. But I also think, I mean, when you look at some of the talk has been loans that are under $150,000, which is the vast majority of the loans our clients have, maybe as simple as an attestation where you don't even have to go through calculations and things like that. And you may not have to pay for professional services to get this done or spend a lot of time with the application. It's kind of another compelling reason to hold off on doing the forgiveness right now.
Well, and the SBA, to your point, already released an application if your loan was under $50,000, which is basically the attestation like you're talking about, and there is thought that it would be expanded up to $150,000. I talked to a banker we had on, Brian McManus, a couple weeks ago, and he said they've put applications in with the SBA. They've only come back and approved like a couple of the lower ones. So he thinks they're still sort of testing out the whole process anyway. So I don't think anything will move quickly.
So I think it's just really important to remember, even though the bank might be pressuring you to do this, and I think keep in mind the bank made a pretty decent amount of money originating these loans in terms of fees. However, this is what they call a 1% loan in the banking industry, meaning the amount of interest they're making on these loans is relatively inconsequential compared to what they would be making if they were loaning this to you for a line of credit or a business loan or other types of things. So it's just not as valuable to them. So they do want to get rid of these loans and get them off the books. But really important to keep in mind that at the end of the 24-week period, from when you initially got the loan, you have up to 10 months to apply for forgiveness. They're kind of taking that into a May or June timeframe. And again, take advantage of the time. I think take advantage of the tax deferral if this ends up being taxable. And I mean, I don't know, Megan, we haven't heard a whole lot about this next round of stimulus that they're negotiating, they're talking about. So there could be changes, but at this point, there's no sense in going forward with it.
I agree. And I know, some of my clients are nervous about, well, is it actually going to be forgiven? I don't think that's even an issue to be worried about anymore.
No, I think some of the changes by moving it to 24 weeks and also kind of the safe harbor rules that they put in as to offering people employment that may not have come back have almost essentially said, we're going to forgive these loans. It's just a matter of how many hoops you're going to have to jump through to get it forgiven and whether or not the ultimate forgiveness is going to be a taxable event to you. So moving on, there is another round of HHS loans, or they're also referred to as PPE loans. And those are being made, or they're actually grants, but they're being made to help you buy protective equipment, to help you make modifications to your offices and things like that, to help defray some of those costs. One of the things in that particular law is initially it was just for Medicare and Medicaid providers, and that the fund that they had wasn't exhausted by that. So then they blew it out to more and more providers, and that's where most of you within the healthcare industry got your 2% of your revenues as an HHS grant. That is now being expanded to even more healthcare providers. So in the last round, it opened it up to people who are non-Medicare, non-Medicaid providers, but now it's opened it up to different professions like psychiatrists, psychologists, some things you might not think of as direct exposure to COVID-19 where they can apply. And it's also letting you apply again to receive these funds if you either did not get them or if you can provide enough substantial financial need in order to get an additional fund. It's expected that these particular grants may be funded toward the end of the year. We don't expect a whole lot of our clients to get this one as they've already received their 2% grant. And quite frankly, a lot of them financially have done fairly well since the reopening. And that's certainly not a guarantee that they're going to continue to do well. But it's going to be tough to demonstrate that financial need on that application to do it. But again, it probably does not hurt to apply to get it. Are these grants, I mean, they're going to be taxable ultimately. We don't see anything that's going to make them forgivable.
Correct. I don't see any reason why they wouldn't be taxable. I mean, you're getting essentially free money. You're going to pay some tax on that.
Exactly. So
looks like the dates, which I know for phase 2, they extended that, but the dates for phase 3 to apply are October 5th. So it's open already through November 6th. So there's still a couple more weeks.
And one of the things that's going to be different about this round of financing of it is the last one was a pretty clear cut. It was going to take 2% of your revenues and you were going to get it. And it was just kind of a matter of time. This one, they are going to try to serve anybody who has not already received the 2% and the expansion that they did to open this up to more healthcare providers first. If there is any money left over, they're going to then figure out a way to split it amongst the people who've already received their 2%. So again, we're not expecting this one to be funded anytime in the near future on it. It could be toward the end of the year or early next year. And it's not going to be nearly as lucrative as the first time around, if it's anything at all. So just something to keep in mind out there as you're going through the application process of it. It's going to ask you what your operating revenues were for the first quarter and second quarter of 2019, and then the same for 2020. And probably the easiest way to come up with those numbers is in the QuickBooks, is take a look at your financial statement numbers. Your revenues are your revenues. That's a pretty simple number. It doesn't give a real clear explanation as to what qualifies for an operating expense in the business. Generically, I think it's going to be all the things that are directly attributable to your production, which are going to be things like your supplies, your lab fees, the wages that you pay, some of the other things like rent and all those things. It's hard to say whether or not those count. Having said that, in my opinion, they're gathering a lot of this stuff more for census information than actually trying to figure out a determination of how much somebody's going to be eligible for based on what they put down on this. So keep that one out in mind. It's out there. The application window is open. You can go to the Health and Human Services website and apply for it. And then another source of money that's out there for a lot of people is there's quite a few local grants, whether it be your city, your village, your town, state, county, local, and things like that. And this is all kind of part of the CARES Act of putting money into the system that they're going to give other governmental agents essentially authority to do it over. Here in Wisconsin, we have a $5,000 grant that is purportedly to be used for, upgrading personal protective equipment and things like that. I think it's a pretty easy standard to make on it. I guess, from my standpoint, the one thing to always kind of keep in the back of your mind is if you're in a business and you are flush with cash and you're doing really well right now, this will be public record on it. Anybody who's taken, for example, the Wisconsin loan, if I look up the business, I can see who got the $5,000 at this point. And not that I think there's going to be a really big fallout from it, but we've all seen the news stories, especially at the beginning of PPP, where Shake Shack got a bunch of heat for taking the PPP loan. As journalists start looking into this stuff, could big law firms or places like that start taking some heat for maybe taking some money away from that struggling bar or restaurant that's out there? It's possible. So I think that's something to kind of keep in the back of your mind as you go for some of those local grants, but it is available to anybody. And I think it just comes down to, you do have to understand it will be public record. Like I said, I don't expect there to be a big backlash one way or the other over a $5,000 grant, but it is out there for somebody to take a look at.
Well, and a lot of times they're kind of segregated to like minority business owners or different segments that they want to encourage too. So, that's positive.
Mm-hmm. So last area we have to take a look at, and we're getting more and more questions about this as people move indoors, and it seems like the COVID-19 spreading a little more rapidly than usual, is what constitutes sick pay, what constitutes FMLA pay, and what is your obligation to your employees as these situations come up. And we'll kind of let Megan kind of go into some of that stuff and kind of go from there.
So the FCRA came out back in March, and we talked about it a lot then, and it was very confusing. And I think some people used it right away, but then we didn't see it at all for the summer, but I've gotten a couple questions already this week on it. So just a reminder, this applies to employers under 500 who have under 500 employees, which is all of our clients. And then, there was an exemption you could apply for. I haven't seen that in practice. I haven't seen dental as a whole get out of that. So I think you should work under the assumption this applies to you. So the first way it would apply is if you have an employee who is either following a federal, state, local quarantine or stay-at-home order, or is quarantined by a healthcare provider. And I think that even applies to if you are waiting for results of a test or you are told to stay home because you think you have symptoms. So in that case, you get up to 2 weeks or 80 hours of paid sick leave at your regular pay rate. And on the employer side, you pay that out, and then you're going to get a payroll tax credit when you file your next quarterly payroll tax return for those hours that you paid out because of this act. For part-time employees, it's based on an average, and I don't remember the exact calculation. Mike, the time period they look at?
Basically, they're looking back at the last year that the person has worked. If they've worked up to a year, it should be noted, I mean, the employee has to be an employee for at least 30 days to be able to qualify for any of these benefits. So if it is somebody, and again, most of our healthcare clients, people aren't necessarily going to be 40-hour work weeks. We have to take an average of what they regularly work. They don't want people necessarily being paid more because they're homesick. One of the really important things to, I think, remember as a business owner in this situation is you can apply for an exemption for these rules. I don't see it being in your best interest, because if you code the payroll correctly, you immediately get a reduction in the payroll taxes that you have to submit. So the government essentially gets you the money back immediately when you pay out any sick pay on this. So if somebody comes in and they have to quarantine, or they actually have coronavirus, they can get up to that 2 weeks. The government's going to immediately reimburse you for it. And I just think in terms of documentation, if you can get some type of doctors, some independent third party to say this is why this person is collecting this benefit, it would be helpful, even though, I mean, can you imagine the IRS being able to audit all this stuff? I certainly can't.
Well, and you don't want people taking advantage of it either. So then there's two other situations where you would pay the sick pay that would be reimbursed through your payroll taxes. If your employee needs to take care of someone who's in the first situation, who's either quarantined or sick or seeking diagnosis, they can get up to 2 weeks or 80 hours, but it's only 2/3 of the regular pay rate. So that would be your employee's child is sick with COVID and they stay home to take care of them. They could get 2 weeks at 2/3 pay. Beyond that, if your employee has a child or who needs to be home because of school is mandatory virtual or the daycare is closed, you can get up to 10 weeks of family leave pay at 2/3 of the regular rate. So this doesn't, if your employee's working at home, this situation, you wouldn't use this pay for it. It would be in the situation where your employee can't do their job at home and they also can't come to the office because of a COVID related reason.
And I think, I mean, the FMLA is probably the one that in theory could be abused more by the employees if they wanted to. And one of the requirements if they're going to take that 2 weeks of paid sick time under FMLA to care for somebody is it has to be a bona fide need to care for the person. So for example, you can't say, well, my buddy, from 30 miles away needs to be cared for, ergo I'm going to go care for him for 2 weeks. That would not count. I think, it pretty much limits it to some extent by making it a bona fide need to somebody who is living within your household or somebody that you're already in a traditional caregiver function for. So if you have an elderly parent or something like that, and you do a lot of the care for that person and things, that would probably fit that requirement of being bona fide versus, again, just somebody randomly down the street. And I think the second aspect of it is if your child is home because of virtual learning or something of that nature, a lot of school districts have the hybrid approach where you go to school in person 2 days and you might be virtual for 3 days. The FMLA is only going to cover the time where the school is going virtual for the 3 days. It's not a carte blanche to take 10 complete weeks off. It would mean that the person would be available to work while their child is in school or not get paid that benefit. So something to keep in mind as people are starting to claim these benefits or schools are starting to get shut down again, that it's only the part where they're going to be virtual or shut down. If it is in-person school and the school is offering in-person school, you can't all of a sudden say, well, I'd like to take 10 weeks off while my kids are going to school. Or even if you opt out and you choose to have your child virtual, if the school is in person, you do not get to claim this benefit. So Again, I think the more documentation you can get on any of these particular people claiming it, just to kind of keep everybody honest within the process, would be helpful. And I think, the employees should have an understanding. I think the biggest confusion we have right now is people think on the sick pay that they get 80 hours each time they have an occurrence of this. So for example, let's say I'm exposed to somebody from coronavirus June 1st. Now I have to quarantine for 2 weeks. I use up 80 hours, and now we get into July and I get exposed again. Now I get another 80 hours. It should be noted that they get a total of 80 hours of sick pay at the absolute maximum, or an average of their 2 week hours worked. So it's essentially once it's spent, it's gone and they're not able to use it again.
Well, and right now this is set to expire December 31st, which is not too far away. Mm-hmm. I would not be surprised if it gets extended.
Right.
I mean, what are the options if somebody uses up their sick pay? They can take PTO, take vacation.
Yeah, exactly. They could take PTO, vacation. You can pay them out of the goodness of your own heart. And I do think, a lot of consultants will say now that they've had some time to digest all of this, one of the things, especially within our dental specialty, we're seeing is some shortages in labor. Right now, it's one of those jobs that's perceived now to be more dangerous than other jobs that are out there. So turning over staff and things like that can be really expensive. So I'm not going to fault anybody for maybe erring on the side of having a little bit of compassion. And if it's a true need, maybe you do pay out some sick pay on your own, even if it's not going to get reimbursed, and hopefully build up some goodwill as we roll into hopefully better times.
The important thing is to make sure your payroll provider knows this is going on so that it can be coded correctly, mm-hmm. and that you do get the credit for it.
Right. Whether it's us or somebody else doing your payroll, you just have to let us know what situation applies. So that way you're getting the immediate refund on your payroll taxes. Wrapping up, stimulus version 3, or is this stimulus version 4, or whichever 4. Stimulus we might be on 4. Right now, is currently being debated between the Democrats and Republicans, and they seem to be far apart on how much stimulus they want to pump in. At this point, all we would be doing is speculating in terms of figuring out what might be in the law. A couple of things we're hoping for that would be in the law. I think the first one would be kind of a blanket forgiveness for any loans under, I'd say, $150,000 or so. And I know the banks would love to get that as well. So it would just be a simple application that you would attest that you use the money properly, subject to audit. And that would all be over and would eliminate a whole lot of paperwork that we might have to do as accountants, or the banks would have to process through. We're hoping that they put some clarity as to whether or not these PPP loans ultimately are going to be taxable or not. Again, the intent was that this would not be taxable income to people, but due to a drafting error, the IRS has interpreted it differently and has said, well, if Congress changes the rules or they change the wording, it would be a tax-free event. Hopefully they get that addressed. I think, like Megan just alluded to, I think we'll probably see some extension or some changes in the Sick and Family Leave Act as we go through the winter, whether it's extended, whether more hours are put upon that. I think that's all within the realm of possibility. And then probably some form of PPP loans again, but probably more targeted, I would say, at the businesses that PPP didn't necessarily help the first time around. A big, for instance, on that would be if you are looking at the bar and restaurant industry or the entertainment industry, the PPP loan was based on labor cost. And those are businesses that do not have, as their expense structure goes, they're not heavy on labor costs. They're heavy on fixed costs like rent and food and inventory to get things ramped back up. We'd expect them to be a little more targeted this time as to how they apply PPP loans. And we would expect that if somebody has already taken PPP, that they'll probably have to meet a higher threshold before they get more money out of it. But at this point, it's all speculation.
Well, and there's 10 days to the election? I'd be surprised if something got passed before then.
It doesn't seem that way, that they're going to get anything done, because I think both sides can look at it and blame the other side if nothing gets done at this point. I know Trump had said something like go big or go home on this, but before he was shooting down some of the other proposals, and we'll see kind of where this all shakes out. As always, if you have any questions on these matters, feel free to give us a call at our office or email us directly. You can find us at bullmoosefinancial.com. And thanks for listening to another episode of The Cornerman.
Thank you for listening to The Cornerman. Be sure to leave us a review and subscribe to us wherever podcasts are found. For more insights and information, visit us at bullmoosefinancial.com.